please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, back home on Dalal Street, the market recovered in last hour of trade to snap 6-day losing streak. The Sensex ended with a 300-point gain, while the Nifty ended just a tad bit below the 10,250 mark. The mid-caps were relatively underperformers yesterday, but they also closed with gain of around 0.5%. The bank was the space that they were outperforming because that index gained over 1% in trade yesterday. But how the Qs stacked up for the day? Manglam, tell us more. How do you think is the trade going to be? You discussed that we might see going back to the 200-day moving average.
That is a possibility, but if we see the first half of trade and the gains are sustainable as the SGX Nifty indicates, maybe there could be some more short covering as well. We'll need to watch out for that. But the short point was yesterday, we snapped a 6-day losing spree. It was a volatile session, but if you take a look at the end result, not just the gains, but the recovery from lows, the Nifty, Sensex, both of them recovered about 1%. The mid-caps as well as the Nifty Bank recovered almost 1.8%. Remember, yesterday was the Nifty Bank weekly options expiry as well, so that could have perhaps aided sentiment. And that was perhaps confirmed once we got the data points because there was no cash market buying. FIS sold about 365 crores in cash markets. The F&O volumes, they were the second highest ever as far as our F&O turnover is concerned. And there we saw FIS buying in index futures, and there was purchase in index options as well. So there was a lot of unwinding in short call positions and some long call positions as well. So maybe it's the short covering rally that popped our markets higher, because if you take a look at the open interest, both Nifty as well as the Nifty Bank, they pulled out some shares in open interest, indicating that yes, indeed, there was some short covering. Similar was the case in stock futures as well. You spoke about Nifty Bank, which outperformed yesterday. So the two components of Nifty Bank out there, SBI and ICICI Bank, both of them saw open interest come down as the stocks moved higher. Even Federal Bank actually saw some open interest come down, and from the high beta space, Reliance Infra gained so much, and that one too saw some shots running for cover. Today we're going in with good cues coming in from the global markets. Trump showing that there is a window of opportunity for negotiation, as well as removing Canada and Mexico from that exempt trade tariff list is something which is a positive, which got the Dow to recover about 200 points from the lows. Asian markets are doing well. The SGX Nifty indicates it's a positive start, so let's see what happens. But the two questions remain: is further short covering possible, or is another attempt at the 200-day moving average possible? Because the Nifty has approached the 200-day moving average for the first time since Jan 2017. So let's see, maybe there is another attempt or not. But if there isn't, the FIs are 48% short, so let's 48% long. So let's see, there could be some more short covering. The 200-day moving average and the 2018 low are pretty close to each other. So that is one level I'll be watching out for. On the level upside, I'll watch out for 10,276. This was the previous low, so this was acting as a support. And now that markets are below that, maybe it could act as a bit of a hurdle. And talking about hurdles, there are a lot of hurdles at the 100, 250-day moving average as well, 100, 20 and 50-day moving average, but they are way far from where we are right now.
Okay, so a lot of important levels to really watch out for. Let's see how the day pans out, because the start suggests it will be in the positive. But Manglam, what are the stocks that you'll be watching out for?
Bharti Airtel is the first one. Yesterday, the telecom stocks were in focus, but now we understand that they are going to consider raising up to 3,000 crores on March 13. So that's something we'll watch out for. Fortis Healthcare. Now we're getting to know who are the ones who have bought in the pledge invocation. So Axis Bank is the one that has acquired about 1.83 crore shares there. So that is something we'll watch out for. L&T Finance, QIP opens today. Remember, the promoters had upped their stake, and now there is a QIP which is at a floor price of close to 162 rupees per share. IT stocks will be in focus. There are reports doing rounds that Japan will recruit 2 lakh Indian IT professionals. So good news for all those seeking jobs in Japan. Ultratech, that one would be a stock that would be on our radar, because earlier they had challenged the NCLT for the Binani cement bid, and now they've gone ahead and enhanced the bid. So that is something we'll watch out for. Sri Renuka Sugars has signed a restructuring agreement with banks and also approved allotment of warrants, preferential shares to Wilmar Sugars. And finally, new kid on the block, HG Infra lists on the bourses today.
Okay.
Now, the Parliamentary Panel of Energy has tabled its report on the stressed power projects in the Parliament. The panel has raised the red flag over bad loans in the sector. It highlights that due prudence was not observed by banks while considering these loans. Rituparna Bhuya sent us this report. Here's what it is.
These companies include, Adani, SR Power, Jindal, India, Lanco, Monet Power, and JP Power, amongst others. There are specific recommendations by this parliamentary panel. For example, one recommendation is on setting up a task force to deal with stressed power companies and help them deal with stressed financial issues. Secondly, phasing out of old power plants so that these new power plants, which are of course are stressed projects as of now, they will have better prospects. Also, the panel talks about reviewing the national electricity policy so that the current, the ground realities are taken into account. And last but not the least, it has also observed that banks have not adopted available guidelines on credit rating of fundamentally strong power projects. It has also made some interesting observations on the SDR process related to power projects, and has said that even after SDR process was carried out, the factors which were responsible for these power projects getting stressed, those remain unchanged, and hence it has called for changing the guidelines of SDR. And has said that change in management should only be carried out if and only if negligence is established on part of the management. So we'll have to now wait and see how Power Ministry reacts and how many of these recommendations are implemented by the government.
Okay, we also spoke to Ashok Khurana, the DG of Association of Power Producers, who believes that the need to identify stress in power sector is important in order to avoid the projects from becoming NPAs. Listen in.
We think if the circular is implemented very strictly without taking care of sector-specific problems, which are beyond the control of developers, but 2/3 of the private sector, that is about, we have operational capacity of 80 gigawatts, of which about 50 to 52 gigawatts is under acute stress. All externalities are controlled by government. So unless you are able to resolve the underlying factors of stress, there is no way these projects will not become NPAs. So idea is, as a parliamentary panel suggested, to have a task force and go by each project and say what is the underlying reason of stress.
All right, and talking stock specific then, latest in the power sector, the Power Minister has actually ordered PFC and REC to not give any fresh loans to DISCOMs which are making heavy losses. And this is unless they draw up a roadmap for reducing those losses. The Minister directed that the DISCOMs which are making losses above 15% will not be granted any loans for capital expenditure or non-capital expenditure until and unless they draw up a roadmap for reducing those losses over a definite time frame of not more than 2 years. So we'll keep an eye out on that. PFC REC, remember, at the low point of the last 52 weeks.
Well, yes, so REC is trading at the 52-week low. However, we did speak to the management of Rural Electrification Corporation, a crucial lender to the power sector. He, however, assured us that there is absolutely no stress in their loan book. Take a listen.
There is absolutely no stress. In my loan book, speaking for REC, 85% of our lending is to the state sector or to the central PSUs. And none of those assets are stressed. If you look at any of the financing institutions, we have the lowest NPAs, I mean, the gross of 2.9% and the net of 2%. Now, this is among the lowest, and this Reserve Bank of India guidelines certainly would have an impact, but that would not be substantial. We have already provisioned.
Okay, that was the management of REC saying that there is no stressed asset as far as their book is concerned. But talking about stressed assets, Videocon Industries Chairman Venugopal Dhoot has said that lenders will not have to take haircuts on their loans to Videocon. In an exclusive conversation with CNBC TV18, Dhoot blamed the cancellation of telecom licenses for his group's debt crisis, but added that he hopes to convince the banks and courts that Videocon is a solvent company. Also said that the group has already submitted loan repayment plans to its lenders. Hear him out.
We think that there is no fault from our side. Our telecom license has been cancelled, and that's why we came into this position. But we don't want bank to make any loss. We have given all plan to repay all of our money to the bank. So on this point we have gone, and we are quite hopeful that we will be able to convince bank also and the court also that we are solvent company. Company is having domestic and foreign debt together is only 20,000 crore rupees on Videocon International Limited. I'm quite sure bank will not be required to take any haircut because our brand is very valuable. We are having properties worth around 7,000 crore rupees and we are having a lot of other assets also. There is no restriction for me to travel anywhere, but unfortunately I'd like to travel. Last 3 years I have not traveled anywhere.